Welcome to the Colby TSP Timer video, where we're going to show you how you can manage your TSP account better than most professionals in this country with 3 trades per year. That's right, 3 trades per year. Warren Buffett tells investors to invest in an S&P 500 index tracking fund in their retirement plan and just forget about it. That is, of course, the C fund in the thrift savings plan. We have high regard for Mr. Buffett, but we're not sure that's the best advice, especially as we get older and closer to retirement. We're not really able to take on the risk in the S&P 500, and that's why we developed the Colby TSP Timer. This chart is an S&P 500 index tracking fund, which is similar or exact performance to the C fund. This is from the ticker symbol SPY, which was introduced in 1993. So if you bought this fund in 1993 when it came out, your gain would be 1,530%, which is astounding. You did have to live through 2 big bear markets and a lot of volatility. If you're able to hold on through all that, your gain would be 1,530%. However, if you use the TSP timer, trading the C fund and the G fund, your gain would be an even more astounding 2,298% through the last quarter, with lower volatility, smaller drawdowns, and less stress. So this is 50% more money over this time frame, which is about 30 years. 50% more money with less volatility and less stress. This information is for you if you have no idea what to do with your TSP account, you don't want to do a lot of work, and you want to stay in the market during the good times and get out during times of trouble. Big market trend changes are opportunities. They're not to be feared. So when we go from a bull market to a bear market or a bear market to a bull market, these are opportunities we should welcome. For example, the S&P 500 lost over 50% of its value in 2008. Actually, 56% lost in a little over a year. So this is an opportunity to get out early in the bear market cycle and get back in the bull market cycle early. Mr. Buffett wants you to sit through this and not do anything, but the problem is the market will come back. Yes, probably. Will it be 2, 3, 4 years? I don't know. No one knows. There's no guarantee in investing. Just because the stock market rebounded in 5 or 6 years, the last 2 bear markets, doesn't guarantee it'll do that again. It could take 10 years. It could take 20 years. So here's an example. This is the 2008-2009 bear market. The TSP timer went to cash. It went to the G fund in January 2008. Well before a lot of the trouble started. The market went down 49% actually after that time to the bottom in March of 2009. The market started rebounding. Things got more favorable. The TSP timer bought back in July 2009 when everyone else was still reeling really from the terrible bear market. So we got back in at a point 25% below where we went out. So that's what leads to this kind of outperformance. You sell when the market's high, you let it go down, then as it's recovering, when things are more favorable, you get back in, and that is what leads to this kind of outperformance. This is not some crazy trading program that's hard to follow with a lot of difficult terms. The TSP timer trades about 3 times per year. Sometimes it's 0 times per year, sometimes it's 6 or 7, but on average 3. We'll send you an email every weekend with a TSP timer update that looks like this. There's more information in the email as well. This will show you how much money to put in the C fund and how much money to put in the G fund. And there's a different row there for different risk tolerances. If you don't know your risk tolerance, there's a link in each email so you can go take a risk tolerance quiz and find where you should be on this chart. You receive the email, you reallocate your TSP account. This is all over a weekend. You wait for next week's email and you enjoy your week. feeling confident that you've done everything to protect yourself in a bear market or to take advantage of a bull market. And for a limited time, the TSP timer is free. Why is it free? We believe everyone in this country should have access to this kind of information. This information is based on mathematics, not opinions, not trying to sell commercials on TV or ads in newspapers. This is just a mathematical calculation that we're giving away. You do have to opt in, so go to colbyassetmanagement.com/TSP timer to opt in. If you ever have any questions, write us at info@colbyassetmanagement.com. Thanks for listening and have a great day.